Hello, ladies and gentlemen. My name's Clem Chambers. I'm the CEO of ADVFN that has organised this show. I'm here to introduce you to Dan Aranda, who is the Managing Director of Spring, and he's the Managing Director of what amounts to an ecosystem, but I'll hand you over to him and he can tell you all about Spring.
Hi, everybody. Hi, everybody. Thanks for coming. Thanks for staying late. I know we're getting on pub time now. My name is Danny Aranda. I've been with Ripple for about 5 years. I've always been partnership focused, so help build the business development and the sales teams. Most recently, I was actually based in London for 2 years and built our European operation where we have, I think, close to 40 people now. And a few months ago, I moved from London to New York working on a new initiative that we unveiled a couple of weeks ago called Spring, which will be our ecosystem development effort, which I can talk about more.
Well, hello. Good grief. Oh, sorry about that, guys. So my first question is about the Internet of Value, because I must say that is a bit of a grey phrase in my mind. And so how would you explain the Internet of Value and what is Ripple's place in it?
Sure. I don't think it's a controversial or novel opinion in this day and age within the crypto space to think about what is happening with different public blockchains as essentially thinking about this as the next evolution of the internet, and that these protocols will be a part of the services that we'll use on a daily basis when we actually access the internet. So in some ways, we view that expression, Internet of Value, as very literal, that there will be a new internet and that money will be embedded directly in it. There was a reference from the Coinbase presentation earlier today. It's a reference that we make a lot too, just the idea that there was an error code made within the web early on around a 402 error, where they were planning to have a future protocol, like a future capability around payments actually be embedded on the web. So we really think that Bitcoin, XRP, and these new protocols are going to be able to accomplish that. To bring that down even a level further, a lot of our team, particularly on the technical side, think about this on a very literal level. So if you think about what the internet is, like what allows my phone to retrieve a cat photo that is sitting on a server over in India, it's really these servers that are all operating off of common protocols just to communicate data and information. And we think a lot of the Internet of Value is going to operate in a similar way, where you're having servers like validators and miners actually being able to communicate with each other, and they're really confirming kind of the movement and the creation of value and of money. And as we start to think about how this internet bridges together and also how these different protocols communicate with each other, we're big believers in payments. Payments is a core part of what our first use case is that we're really exploring at Ripple. And we think that if the internet today is kind of tethered with just packets of information and data being sent around, the Internet of Value will have a similar kind of architecture, but what will be sent around is money, will be value. So we almost view payments as kind of this connective tissue to whatever this new kind of internet is. And I think there have been similar theories in the financial services space. We've done some work with the Gates Foundation on producing open source payment system for emerging markets. That project initially within the Gates Foundation was called Level 1, and if you read the original Level 1 white paper, they talk about how payments are the connective tissue to any financial services ecosystem. Any financial service kind of platform includes like two core components. One is that users can hold accounts. So you and I can hold bank accounts, or we can hold an account on the Bitcoin blockchain. And then there's some kind of connective tissue between those accounts to allow value to move, and those are payments. And on top of that, you can offer any financial service. You can offer lending, right? If I give you a loan, you don't actually have the loan until money moves from my account to your account. So we think it's core to financial services, but also just to internet services in general. So like Uber, one of their largest engineering teams focuses 100% on payments. So we think payments really matters for finance, it really matters for the internet, but it's actually going to kind of recreate the actual fundamental architecture of the internet as well.
So the thing that a lot of people find hard to grasp is you have your coin or your token or whatever, however you want to call it, is how is that actually manifested as value? is there like an off-ramp in your offering so that people can go Ripple to dollars, for example? Or does it have to be outside of what Ripple does to actually connect your coin with actual fiat, for want of a better way of putting it?
Sure, to maybe parse out some different components. So, some of this architecture won't be novel to people in the crypto space, but there is a protocol that is decentralized and hosted by various validators around the world called the XRP ledger. And that's where XRP as a digital asset, as a cryptocurrency lives. And then there are services, exchanges that offer on and on ramps into that digital asset. And you can pay in dollars, euros, Korean won, a variety. There's about 70 exchanges around the world that offer trading in and out of XRP. And that provides on and off ramps both for retail users, but we also have products that provide on and off ramps for corporate users as well to be able to send cross-border payments. And those solutions still use those exchanges. So our partnership, for instance, with like MoneyGram, actually use crypto exchanges on each side between dollar and Mexican peso pair, which is bridged through crypto in between to provide better liquidity for cross-border payments.
So I take it you have either actual relationships with people like MoneyGram, or you have relationship with the blockchain, and the blockchain has a relationship with a third-party provider of that off-ramp, but you don't have a connection to that provider.
Yeah, when we're working with MoneyGram, that's a normal kind of very traditional like vendor relationship. Like we are selling them a piece of software to do cross-border payments. If you think about the relationship between an exchange and a protocol, that's like very different. These are decentralized, permissionless, open protocols. There is no business relationship there. There's really like an API relationship where the exchange integrates with the XRP ledger to offer kind of custody and trading around it.
So a little bit like you're like Red Hat is to Linux. So the blockchain's out there, and you're providing the place to go to actually make that protocol work.
I'm not sure I would say that either. I mean, I view Red Hat as a little bit of it's like a consulting service around an open source protocol. We're not really offering consulting. It's more we're building solutions on a protocol. So think about Google on top of the internet. You're building actual kind of software services that make the underlying protocols usable for functional economic use cases.
Or Oracle on top of the database protocol.
Sure, yeah.
Okay. So you are basically in the forefront of cross-border payments, and pretty much at the forefront of interbank and blockchain movement of the blockchain world. What's the kind of drive for that? Why are you positioned in that place?
Well, I mentioned before, we're fundamental believers in the importance of payments, both in financial services, the internet, and this new decentralized web. And as we were thinking about payments early on, Ripple's a company that's been around since late 2012. I think we officially incorporated in December 2012. And if you think back to that period, like 2013, 2014, there was a lot less capital in this space. And we were faced with this prospect of, hey, like, we want to bootstrap this ecosystem. We want to bootstrap this protocol and produce an application on top of it that would generate kind of real utility for it. And as we were thinking about different use cases those things could be, around payments, the highest friction and pain point that we found was around cross-border. So if you think about here in the UK, you have services like Faster Payments, Chaps and Backs, RTGS from the Bank of England. You have great payment systems that already exist on like a domestic or regional level. So like there's SEPA in the EU as well. But because there is no global central bank, you don't really have a global consolidated payment system. You have layers maybe on top that simulate that, so things like Visa and MasterCard, or even SWIFT as a messaging service. And we thought that the decentralized architecture of blockchain technology and these public ledgers could really help kind of interoperate a lot of these different systems. So with that thesis in mind, we just started looking in the markets like, hey, who would be the first users? Like, who is the right first customer to focus on? And anytime when we're doing any of our projects or kind of launching a new solution, we're always thinking about the go-to-market and the sequencing of that solution. So you might have a really great idea, but if that idea makes sense only in 10 years, it's it's probably just not the right timing, and timing in startups and technology is everything. And so as we started to kind of bridge that out, speaking with different financial institutions out there, really what we discovered is like banks are the primary participants in payment systems. They're the ones who are serving the vast majority of volume in the arena today. And so we started producing solutions for them and seeing if we could solve problems for them, and we got a lot of traction around that. So our software solutions, our enterprise solutions, are now sold to about, I believe it's about 120 financial institutions around the world. Our cadence right now is that we're selling a new bank every week. Those contracts are actually production contracts, so it's not a proof of concept or a small experiment or a pilot, but it's actually a service that they're going to put on the shelf for their customers to use.
So those solutions, I mean, my experience on inter-country transfers, and we do a lot of them at ADVFN, for example, is that it's very expensive, and it takes a long time, and it's not very reliable. But if you take the unreliability out, because 4 out of 5, it's fine, you take out the delay, and if you don't need the cash tomorrow, that's not such a problem. It's the cost. So is that cost a real cost, a hard cost that these banks want to get to lose and pass that saving on, or is it actually perhaps not the happy state for a bank to make that process more efficient and therefore lose a lot of margin?
I think there's a really important lesson here that isn't just applicable to banking or financial services or cross-border payments, but I think to the crypto space overall. I don't think the real value proposition and the business case for adopting crypto-based solution is going to come around cost savings. I think that's part of it, but I think there's been a lot of focus that I think is a bit wasted on how much can these technologies really kind of remove costs or improve processes. I think it's about growth. It's about revenue potential. So a lot of times when we speak with a bank, it's more speaking about how can you offer a new kind of service to your customers that it's either going to help you grow your existing customer base, so get kind of more wallet share from those customers you already have, as well as how is it going to enable you to pursue like new kinds of customers and enter new markets. So a good example of that, one bank that we love working with, Siam Commercial Bank in Thailand. Most people have probably never heard of Siam, but one of the larger private banks in Thailand. There's this big opportunity happening in Southeast Asia where there's going to be double-digit growth in e-commerce sales over the next half decade. And they view Ripple and crypto technologies in general as a strategic weapon to be able to go seize that opportunity and really offer innovative solutions to the market to be able just to process payments better for their customers.
But is that seizing the opportunity from other banks that don't, or is it seizing a new opportunity?
I think you have to recognize some of these returns are non-linear. Like when you introduce some of these technologies, like the pie, I mean, maybe I'm just an idealist, but the pie gets bigger. There's obviously shifting around in markets where some folks lose and some folks win, but I think ultimately what we're talking about is like anytime you look at these new technologies being introduced, so just data sharing, and you introduce the internet and you get a lot more kind of data produced and shared, we think the same is going to occur for transactions, that when you introduce these new technologies, there's going to be a much, much larger addressable market. I mean, to put a really fine point on it, like today, I've probably done about 8 transactions. I have Apple Pay on my phone, connected to my NatWest card. I used it to ride the tube a few times. I paid for coffee over here for whatever it was, £2. I guess I did about like half a dozen to 8 transactions. As we've been speaking right now, my phone has probably sent out about 2 million packets of data information because it's connected to the internet.
Or to Google.
Yeah. And we think payments are going to work in the same way. So it'll be at much, much smaller and more discrete values, but just the number of transactions is going to be kind of multiples greater.
So, I mean, it's interesting because you saying that about increasing the market and increasing the opportunity, increasing the number of transactions, the business growth opportunity, and I can totally see that. But all I tend to hear from banking people is basically a scream of terror that somehow this is an existential threat to their futures. And like all media, when a new media comes along, it doesn't tend to kill the old media. The old media gets bigger. You know, Kindle came along, books are selling more today than they did before. Television came along, movies are doing better than they were doing in the 1960s. New media tends to generate more media consumption, and it's no reason why it wouldn't do that in financial services. But you hear the banks seem to be terrified, certainly in Europe and certainly in the UK, terrified of anything crypto-shaped. And it doesn't seem to be any reason behind that beyond the fact that they are worried that people won't need bank accounts. What's your feeling about that?
I feel it's just an education process. I think fear is usually coming from a lack of understanding or a sense of uncertainty. And I don't think banks need to understand crypto on a fundamental level. I don't, like today, if I want to produce a website to offer an online service, I don't need to understand every single component and fundamental of the internet in order to do that. Let's say I wanted to put up an online store, I can go use Shopify or Magento or any other kind of set of online platforms or tools to go put up that website and go put up that online store. I don't have to start digging into, you know, how does internet protocol itself work, or what is TCP, and like what, you know, look up all these kind of different definitions. In a similar way, you know, what we've done with Ripple's enterprise solutions is abstract some of the underlying technology pieces and just surface a refined solution, a refined product for a specific use case to solve a specific problem, and it addresses a core business need of the customer. Whether that customer is a bank or not, I think that's true across kind of all product development that needs to happen in the technology space. And I think maybe that was one of Ripple's early strengths, is like I think because we had a really deep and concerted focus on one use case and one problem, and we really valued that focus and kind of trying to hone in our efforts, it allowed us to get traction fairly quickly. We were probably one of the first companies, I mean, I don't want to speak in definitives, but we were probably one of the first companies to be able to approach an enterprise customer and say, hey, here is a solution that you can use today for a specific use case and it works in production, versus here's a collection of protocols that maybe you can implement for, you know, a variety of different use cases.
So what happens over the next 10 years for Ripple? Where's Ripple going in the short, medium, and I suppose you have to say long term?
Sure. I think what you can expect from Ripple is like more focus and traction around cross-border payments, like continuing to really push that button and make sure that Ripple becomes the best way to move money around the world. Again, the reason we have that focus is we want to be the best. You don't really win over existing and proprietary solutions by offering something that is a little bit better, or even twice as better. Like typically you have to be 10 times better. And if one of our early competitors, as this market bridges out, is Swift, right? That's kind of been the typical analog to Ripple in the space. Swift is a consortium of a whole bunch of banks, thousands of banks. It's very entrenched. It moves most of the money around the world. It's a really serious competitor. I mean, we have a lot of respect for that organization. At the same time, if we're gonna beat them, like what we offer has to be really good. That's why we have to like focus on it. And we think our traction is really playing out, and the network effects are starting to build around that. Now, Ripple is a company. It's one company focused on one use case. The new initiative, Spring, is essentially going to be providing support to a variety of developers and other companies to think about different use cases for the underlying protocols that we use. So a quick example of that is our CTO has actually spun out to start his own company. Stefan Thomas has been our CTO for about 5 years now. Stefan had worked in the Bitcoin community for a number of years. He did the original JavaScript implementation of Bitcoin, as well as some other projects. And his new company is called Coil. It is also focused on payments, but more on the very, very low value end, so focused on micropayments, specifically as an alternative to ad-based models to monetize the web and monetize web content, whether that's articles or streaming video. And the protocols he'll be using for that project include the XRP ledger, also Interledger, which is an interoperability protocol. So just allowing for kind of clearances between different blockchains to allow money to move, as well as a platform called Codius, which is a smart contracts platform that is actually agnostic to any underlying blockchain.
So how small could you have a micropayment with Ripple or part of the Ripple value chain? How micro can you make a micropayment and it still work?
I mean, it's a ledger, so it can be infinitely divisible. So you could have like literally like a millionth of a penny.
But would the blockchain itself be able to stand up to zillions upon zillions of millionths of a penny?
It's a great question. I mean, scaling is a huge challenge in this space. XRP Ledger, we've been able to get to process about 1,500 transactions per second. That's still not anywhere close to what Visa or MasterCard can process, which is roughly around 45,000 transactions per second. So there's still orders of magnitude to go. I think also, though, you're beginning to see kind of novel kind of implementations that might scale blockchains. Part of that, I think that's interesting, is like this concept of sidechains. So in the Ethereum community, you're seeing that expressed through Plasma, where you're still able to kind of leverage the public blockchain for security, but actually have your own ledger for a specific application, so you can get kind of scalability out of that, and just exploring kind of some similar architectures.
Well, I mean, Bitcoin, which was charging me $25 a transaction at Christmas, is now charging me 4 cents. So if Bitcoin can do it, Ripple can do it, right?
Yeah, I think you know, with Bitcoin, for certain use cases, you're a little bit using a sledgehammer to do maybe a surgeon's job. So thinking about setting like a retail transaction, say to pay for coffee using Bitcoin, but it costs whatever $8 right now to process across the network. Probably not.
I think it's down to like 4 cents now, so I can get my coffee.
Yeah, but probably not fit for purpose.
Sure.
So
I have to wait an hour to get confirmed.
But that's not necessarily a bad thing. I think you just have to think about like what use cases apply to those specific resources.
So what are the new upcoming use cases for Ripple?
Well, again, Ripple, the company, is focused on cross-border payments. If we think about the underlying protocols, so things like Codius that I mentioned, Interledger, XRP Ledger. So it's really important to us that Interledger is really for interoperability. It can work against any blockchain system, also any ledger system. Same with Codius. It communicates to Interledger as an interface into the various different blockchains. And really, we think that kind of layering, where you're not programming the business logic directly into the underlying database itself, is going to alleviate some of the scaling issues that we've seen, for instance, in the Ethereum network as well. And I think we're interested to see what developers come up with. I mean, areas that we're strongly paying attention to, security tokens, non-fungibles and digital collectibles that we've seen. Micropayments is definitely very close to our hearts. Decentralized exchanges as well. XRP Ledger was actually the first decentralized exchange that launched in production, and it still processes the most volume. I think it still processes about $30 million a day, where like Ether, Delta, and 0x are still maybe at around $4 million a day. So we're interested in kind of expanding those use cases and see what's possible.
And what are the cryptocurrencies and blockchains, I should say blockchains really, other blockchains that you find particularly interesting?
I think Ethereum, for showing what's possible, just in respects to like a developer community. They really kind of built that in an endogenous way and brought talent to the sector that maybe wasn't there before. I think projects like Decred, from a governance perspective, in terms of how the tokens are being used and staked, to have a say in how that blockchain evolves. But I think there's a lot happening kind of on additional layers. So similar to Interledger and Codius that we've been working on, Lightning Network for doing kind of clearances on the Bitcoin blockchain, and how that's going to help it interface with other kind of public service infrastructures or blockchains in the space as well.
Well, I think we've reached a point where we might take questions from the floor. Is there anybody out there who's got some questions for us up here? Gentleman at the front was the first. Yeah, I can hear you. There you go.
Hello. Yeah, so you've got a Ripple as a token, and then you've got a protocol XRapid, right, which is predominantly like marketed towards banks. So where do you see future of Ripple in terms like and XRapid like going together?
Sure. The token is XRP, the digital asset XRP. Ripple is a company building solutions utilizing that underlying protocol, and XRapid is one of those solutions. It's one of the products, right? And XRapid is focused on essentially bridging fiat to fiat transactions. So, for instance, the use case with MoneyGram was move US dollars to a bank account in Mexico. And that in between the actual transfer, you're taking dollars, you're converting them into XRP, moving XRP along that blockchain, and then converting that XRP back into Mexican peso. And actually, we were able to complete that transaction within about 2 minutes, starting from a zero balance over in Mexico. And that solves a real problem for a lot of corporates as well as financial institutions that have a lot of liquidity tied up around the world in order to make cross-border payments through pre-funding. So we see a lot of the use cases around XRP really focus on that fundamental premise of providing like on-demand, faster liquidity. And we're interested in exploring that not only on the fiat to fiat side, so say bridging Thai baht with Japanese yen, but also on the crypto to crypto side. Like what if I pull out my phone, it's got a Bitcoin wallet on the Lightning Network on it. It's utilizing an application that has various kind of decentralized networks in the background, like Filecoin. I don't want to have to go out and purchase Filecoin. How am I going to get the liquidity between those two? And that's something where we want XRP to play as well.
Hi, when it comes to regulation, how do you see regulators worldwide affecting the crypto scene, and Ripple specifically?
Sure. Regulators are a key stakeholder in how the space is going to evolve, particularly at the application layer. And I think the process is really, for us, has been about being proactive. Like when I joined Ripple, actually, one of my interviews was with Chris Larson, who is our chairman and one of the founders of Ripple. And his prior companies, he had done Elon, which was the first online lender, as well as Prosper, and that was the first peer-to-peer lending marketplaces. Both those companies at the time were like regulatory, there was a lot to unpack. And there was a lot of engagement and lessons that he learned in terms of how to work with regulators. And the end lesson ended up being like, be proactive. Like educate regulators about what is happening. Show them how it works within the existing regulatory framework, and show them what open questions still remain that you're willing to work with them on to figure out. So we have a regulatory relations team. We have folks in Singapore, in London. The director of regulatory relations, Ryan Zagoni, he's based in New York. He's frequently spending time in Washington, D.C., and really proactively talking to that community to make sure that they have a well-informed point of view in terms of what these technologies are doing and what use cases Ripple specifically around cross-border payments is pursuing.
Another question from the floor. Another question from the floor. Was that a question? No? No? Oh, there we are, the gentleman back there. I don't want to monopolise all the questions. Come on. You know you want to ask.
Hi. There's been a lot of talk about the centralization of the Ripple ledger, and you seem to be doing a lot of work about making it more decentralized. I just wondered if you have an explanation of where you are now and where your targets are in the near future.
Sure. So just the background on the question is decentralization is obviously a core tenet of this space. It's what provides a lot of these blockchains with added security. Ripple is a company that's contributed to the development of the XRP ledger as a protocol. We also run some of the validators that host that network. And that can be controversial. Today, there's about, I believe there's about 250 validators are contributing to the hosting of the XRP ledger. And it includes firms like Microsoft and kind of some of our more kind of enterprise partners. And about 25 of them are run by Ripple. The plan is that by the end of the year, none of the those validators that actually contribute to the consensus process will be run by Ripple, and part of that has just kind of been stabilization work on our side. So we're committed to that target to have that done by the end of the year.
I mean, it's a very good question, because I think a lot of people think of Ripple as a centralized blockchain, and very much a B2B one, and very much, you know, not the slightly anarchistic model of Bitcoin. But that's not true, is it?
We're very committed to the vision of an open internet. Permissionless public blockchains, I think, are in our DNA. We've never subscribed to the idea that private blockchains or consortium blockchains are a real solution. I think a lot of them we view mainly as more complicated databases that maybe aren't delivering real value. And I think given what's happened over the past year in the markets, I think the proof is in the pudding about where the innovation is. So we're committed to that vision, and I think maybe where the criticism comes from, you know, it started from the early days. Like, Ripple was probably the first alternative consensus algorithm that was proposed for a public blockchain, and I think some of that comes down to kind of schisms in the community. And I think that debate still goes on. Like, I don't think anyone's figured out kind of the perfect consensus algorithm to perfectly decentralize a network and also get perfect scalability. But I think, you know, you're continuing to see evolution in that space, and we're trying to contribute to that as well.
Well, Dan, thank you very much for coming up here and coming under the spotlight. And I hope everyone enjoyed this talk about Ripple. Thank you very much.
Thanks.